Hello, everyone, and welcome to Newfi's webinar today. We're so excited to present to you bank statement loans, tips and tricks for your self-employed borrowers. We will be recording this session, so if you miss anything or ever want to refer back to it, you will get the PowerPoint presentation and the recording of this webinar sent to you following the call. If you have any questions, we want to hear from you. We want this to be interactive, and we would love for you to use the Q&A function to send in any of the questions that you may have. So with that being said, I'm so excited to introduce you to our host today. Scott, do you want to start by introducing yourself a little bit?
Yeah, welcome in everyone. My name is Scott Berger. I'm a regional account executive here at Newfi Wholesale. Been here for about just over 2.5 years. Top 20 account execs in the company, and we're rocking and rolling every day, helping people find their borrowers' needs and close those loans. So we're excited to present to you today. Yeah, MJ.
Hi guys, my name is Mike Jackson. Thank you very much for being here today. Been with the company since 2021, VP Regional Sales Manager. So Scott and I both work out of our Arizona office. Newfi is based out of Emeryville, out of San Francisco, but we do have an office here in Arizona, and then we've got reps all over the country as well. So thank you very much for being here. Looking forward to showing you everything we have to offer on bank statements. So a little bit of history on why Newfi is a go-to lender. You can see here on some of our bullet points, pricing, we're consistently competitively priced. With us being backed by Apollo Athene, which is a private equity firm, globally known, probably ranked third, I would say, globally in private equity firms. It gives us a very strong standing as far as how we're priced daily. We're not depending on the market and following the bond market as much as some of our competitors may be. So pricing is always going to be solid with us. Innovation with our products, non-QM jumbo, second liens, a lot of different options for you. This is basically primarily looking at anything that doesn't fit in the box for your W-2 Fannie Freddie self-employed full doc type loans. So a lot of options with us there. Our service is second to none. So deep experience with the servicing on this stuff from our ops end, and making sure that your loans, when they come in, are getting the closest look as far as making sure you guys are taken care of correctly. We have multiple delivery channels for you guys. We have wholesale and correspondent, and just depends on what platform you're in and what fits best for you. And then we're on multiple pricing engines. So you've got Arrive, Loan Sifter, LoanX, Lender Price, so you can find us on there. So anytime you're looking for anything, you're just reaching out to your AE to make sure that the pricing that you're seeing is accurate.
All right, and without further ado, let's dive into bank statements. So the very, very basics here, bank statement loans, if you don't know, if you've never done one, we use either 12 or 24 months bank statements. We do allow business or personal accounts, and we'll even commingle them. So we can do both. We can do multiple accounts per business. And then we default to a standard 50% expense factor. So if a company has $10,000 average monthly deposits, we're going to give your borrower $5,000 a month in income. And as we dive in, you'll see what we can do to really open that up and get your borrower the most income possible, as well as how we figure out this exact number. All right. So most of our bank statements end up on our Sequoia portfolio product, and we have a lot of the details on the screen here, really what this portfolio offers. So of course we can do 12 months or 24 months. You'll see 12 months caps at 3.5 million, but 24 can go all the way up to 5 million, which is our highest loan amount without needing your loan to be sent in for review. And then, of course, on a purchase, we do up to 90% LTV, 85 on rate and term, and on bank statements, we go up to 50% DTI, but just a little tip, Sequoia does allow 55 on a 2-year full doc, and we work with FICO scores as low as 20%. course, we have a bunch of term option available, including interest only on 30 and 40 years. We just launched ARMs as well, which we're super excited about. So if you're looking for ARM options, call your AE to dive into those. There is like a seller funded or interested party funded buy down option as well. And then we can do bank statements on investment properties, first time home buyers, and 12 months, that means that we need minimum 1 year history of the borrower receiving or making their self-employed income. And just a little tip right there is we do require your borrower is self-employed in order to use bank statements. For most of our products, we do have a couple other accessory products that might not need them to be self-employed, but typically you're going to need a self-employed borrower.
Which may seem self-explanatory on a bank statement loan, but again, sometimes, I think people think bank statements and they think that there's a lot more flexibility or avenues that would you go. But again, you've got to have somebody that's actually self-employed to be able to use the bank statement option. Simple as that. And again, on the credit scores, the lowest 620 is on our expanded matrix that we can go. So.
All right, so that's the basics, but what if you need something that's a little more outside the box than just running with the standard expense factor, the standard calculation? If you do, the first thing I want to present is our personal bank statements program. Now, this is a really cool program because the minimum ownership is only 20%, and it works real simply. Any transfers that go from the business bank account into the borrower's personal bank account over the most recent 12 months, we'll add them all up, divided by 12 to get a monthly average, and there's no expense factor because we're going to consider that personal income. Now, the reason we have this or W-2 payroll deposits is because one of the powerful things about this program is that it even works if the borrower is paying themselves a W-2. So this one is super easy. If you can go this route, it's going to be the easiest route because the calculation is simple. And again, it's 100% income. There's no expense factor.
So one thing I would add to that is it's kind of, starting off with what's easiest. It's basically when we're looking at these loans with your loan officers with you guys, we're basically looking to see, what's the easiest route, and then we cascade back and go deeper and dive deeper as we go. So kind of as we go through this whole presentation for you, we're going to kind of go deeper dive into different ways of making sure that we always have an avenue for getting your clients approved, right? So if we can go with the path least of resistance, then we'll start there.
And I have a question from Miguel. He's asking, can we use non-occupant co-borrower income to qualify on this program as well?
Yeah, absolutely. So we'll dive in a little later as well, but we can mix income. We are very good at commingling income, whether you have like a W-2 borrower, a non-OC co-borrower. We're super flexible with that. We just want to make sure that we iron out the bank statement before we really know what else we need. Because a lot of times we don't need the non-OC co-borrower. We can use some of our other avenues. But if you do need them, we're going to add them on and get it done for you.
Amazing.
All right, now let's talk about the standard. So business bank statements, right? We really have 4 ways this program breaks down. The first thing I want to point out is if you're using business bank statements or if they're using their personal bank statements as business bank statements, right? Then we're going to require a 25% ownership in the company in order to qualify them on this income. So with transfers into their personal, that personal program is 20% ownership. But if you're using the actual business deposit and figuring out the long form math, we are going to require 25%. And that's where we default to that standard 50% expense ratio. So that's option 1. Now, the second option is to get a letter from the borrower's licensed tax preparer who did file their most recent tax returns. Or if they are on extension, filed the most recent tax returns plus the recent extension. And with that expense statement letter, we can drop that expense factor as low as 10%, so long as it makes sense for the nature of the borrower's business, right? So someone who's in like construction is usually a very high expense industry. we're going to be a little skeptical if you have a high expense business, high expense industry, but then send us a 10% expense letter. It may be real, and if it is, we'll use it, but we may have some more questions in those situations.
Just want to make sure it makes sense.
Yeah. And then here's two other really cool options that we offer. They're very powerful because these are other ways to save your bank statement loan or to save your loan in general. So the first one is a third-party prepared P&L. Now, again, this is or does need to be provided by the tax preparer who filed the borrower's most recent returns. But what's cool about this is if you can't get the expense letter, we'll take a P&L over the bank statements provided to give us a net, or the expense is built into the P&L. What's great about this is the tax preparer and the borrower, they're going to know the bank statements better than we are. So a lot of times you're actually going to get more income out of this because simply by the tax preparer moving personal spending into personal and business spending into business, you're going to have a better net. And that's going to give us the most accurate calculation. Other than that, we have another program. This one's not as often used, but when it is used, it is super easy. What we can do is we can actually add up the deposits, add up the withdrawals, and do deposits minus withdrawals. Now, generally speaking, this is going to work when you see the balances on the bank statements either go up or stay the same, because that automatically indicates that this business is probably making more money than it's spending. But the really powerful play on this is that you can add back major personal expenses, right? So payments to ownership can be added back. Personal mortgage or rent payments being made through the business, personal income taxes, anything like that, we can add back. The one thing that's hard to add back is vehicles, because oftentimes if a business is paying for a vehicle, it is a business expense. So other than that, pretty much any major personal expense can be added back to give you a deposit minus withdrawals. And so that builds in the expense and gives us a net. And again, just to remind everyone, 25% ownership when you're using business calculations. All right, now kind of this is a bit of a summary page here because we went over a few ways to lower that expense factor. So with that letter from the CPA or tax preparer, we use the CPA term as an umbrella, just has to be their licensed tax preparer. So with that letter or the P&L, we'll let you go as low as 10%. If you use deposits minus withdrawals, we'll use what the bank statements prove. We also have two CPA programs. One is gross receipts and one is a different style of P&L program. Now, these ones only require the most recent, like 2 to 6 months of bank statements to qualify. So some borrowers love this option because they don't need to provide the full 12 months, the full 24 months, right? The CPA is going to provide the data points that we need. There are a few other limitations on this, like it caps out at 80% LTV. But this is a great program for those borrowers that still want to go bank statements, but only want to provide as few as possible. And there's a couple build-ins here that might help you save a loan that otherwise couldn't be done through our typical bank statement process. So your AE will guide you through this one, just like we were talking about that waterfall. We always want to start out with a simple one. If we need to move to this one, we absolutely will. But also, if it's the right one to start with, we're going to guide you down that too. We also have awesome 1099 programs. What's great about these is it's, again, you only need the most recent 4 months bank statements to basically prove that this year's income trend is on track to make what the 1099 represents for last year. And then we have another 1099 program, one of the most powerful 1099 programs in the mortgage industry. We market this as our W-2 to 1099 because we can underwrite any 1099 borrower who has no job-related expenses or provides labor only. We're going to underwrite that just like it's a W-2 job. So typically, this is going to be a borrower that's receiving regular pay stubs, even though they're a 1099 employee. However, it's not limited to that borrower. Any borrower who's on a 1099 contract that you can prove has no job-related expenses or is labor only, any borrower on a 1099 contract where you can prove that, we can underwrite it like a W-2. They get full doc pricing, and it's a very easy loan. The calculation is basically just year-to-date income calc, just like a new W-2 job.
So I think, what's awesome about all this, you guys, if it's hard to say like exactly how experienced people are when they're looking at, the quote unquote non-QM. How much do we really know about it? I know coming into it initially, years ago when I first started doing this, I've been doing mortgages since 2006, and it was all Fannie, Freddie, FHA. So when I got into starting to do bank statement loans and all the different options that we have with it and how much we've expanded since I started in 21 to where we are now, to look at that 1099 program, it's absolutely amazing. So it can be intimidating if you've never dealt with it before. And, that's why we do these webinars and try and get this information in front of everybody, is just to make sure that you fully understand that there are so many options that you shouldn't have to ever say no to a client, and even more so, how do we market to this? How do we get in front of these clients and show them what we can do, what you have available to them? So these are some very sharp tools to have in the shed for stuff that just doesn't quite fit in the box. And, again, you start off, you try to keep it path of least resistance, but then, we can keep going deeper and deeper and deeper until, there's nowhere else to go. But usually we figure out a path forward on these. We're pretty successful with moving these loans forward. And we're closing these, you guys, and probably, I think we're averaging right now about 22 days from the time that we get the docs in on the application. It's registered, we get the docs in, we put it in line for an underwriter to review it, to we're clear to close and moving into escrow and getting them signed and getting them into the home or getting the refi done for them. So
yeah, it's a little bit better than that. So from submission to docs, we're currently averaging just over 18, under 19, and it's 22 days to funding.
Yeah.
So that's awesome. And the last thing I want to say is that if a borrower is on a 1099, you don't have to use the 1099 program. We can still go the full bank statement route if that's best for that borrower. So they're not forced into one thing or another. We're trying to open up every possible option to get every borrower qualified.
And just think how much easier it is, from dealing with full doc and having somebody that's self-employed and having to get, the 2 years tax returns, personal business, signed and dated, and all that stuff, it's very invasive, and for your clients, having to provide all that documentation is, and we've been dealing with for years, most of us. Some of us are newer to financing and doing mortgages, but either way, just getting 12 months bank statements or 24 months bank statements is a much easier process for our clients than usually getting into their tax returns and whatnot.
Yeah, especially when you're talking about gap year P&Ls and all that stuff.
Or multiple businesses.
And then the CPAs are hitting them over and over and over with expenses, and we want to avoid that as much as possible.
People are very interested in the 1099 program. I have a bunch of questions. Hope you're ready.
Good.
Yeah.
So for the 1099 program, is it 2 years of income or could we do 1 year of income?
It's up to you. We offer both. So we have generally 2 years of income is going to get you an eighth better in rate. Sometimes it's the exact same price. So even if you have 2 years, maybe we're going to go 1 year and make it a little easier for you.
Yeah.
Awesome.
Again, path of least resistance, right? So whatever is going to get you there the fastest. Rate isn't always the most important thing, right? So
How long does a person need to be a 1099 employee, and what is the minimum time frame for the 1099 income?
That is a great question.
yes, it is.
So if they're a 1099 employee with expenses, we require them to be on the 1099 receiving their income for 1 year. If you can prove either with a letter of explanation from the employer, a WVOE, or in the contract, if one of those 3 items proves that they have no expenses or they're labor only, then we can actually do it technically after they've started employment. I like to say we're going to close that loan on day one of employment. Technically, they need to start for us to issue that clear to close.
Awesome. And what is the maximum LTV on your 1099 programs?
So our LTVs are based on FICO and loan amount, but the max LTV you have access to is 90% on the 1099s. On a purchase, 85 on a rate and term.
Yeah.
85.
And again, it just goes back to the loan amount, you know, it dials back as you go higher in your loan amounts.
Yeah.
Any bank statement options for someone who's been working as a day trader for the last year and a half?
Ooh, that's interesting. So it kind of depends on how they're receiving their money.
Yeah.
Generally speaking, we don't have a good bank statement option for someone whose income comes from dividends or proceeds from the sale of stocks and bonds or things like that. Usually that's going to be a full doc loan. But let's say they have an entity or a company in place and they're day trading for other people and they're receiving fees or income from that business. In that case, we're likely going to have a bank statement option for them. It really just comes down to diving into exactly what their income stream is and exactly how we can document it and kind of what that means. So that's a harder question to give a direct answer to.
Yeah, I would think you want to definitely make sure you get that one in front of your AE. Once the AE gets more details, we have a daily call Monday through Thursday where we get on nationally with the head of our credit and basically go through any scenario that we have that's really not fitting in the box that we can't figure out from an AE to our broker LO standpoint. Then we get on that call and basically talk through it. And then if we need to, we email over more information to them and get on the phone with them and go through it in a deeper dive. So anything you have like that, most certainly make sure you're getting in front of your AE with it.
And then we do have asset options, which technically are bank statement loans, right? So we have asset depletion and asset utilization. I think we mentioned those later in the presentation as well.
Yeah, we'll be touching on.
Yeah, so one is like a 3-month ownership, one is a 6-month ownership of assets. So there technically is a way to use their bank statements to get them qualified based on assets if they're holding enough. You know, so there's a lot of options, right?
I don't even recall ever coming across that one before. So that's actually pretty good.
Can we use bank statement income from two different companies owned by the same borrower?
Yeah, absolutely. We do that all the time. Yeah. So I want to give a high level answer here. So generally speaking, we allow a bank statement loan to have 4 bank accounts, whether that's 4 different companies with 1 bank account, whether that's 1 company with 4 different bank accounts, or any combination thereof. We generally cap at 4 accounts. Now, we can obviously go less. We're happy to go less. But if you need more, we can do that too. But that's where you're kind of stepping a little outside the box. We're going to need to go into that meeting with Julie, or sorry, with our head of credit, and ask him like, what are the details? Is there anything else that we might need to prove to do this, and figure out if we're going to need to add exception pricing to it or not. So definitely we can make it happen. Multiple businesses, multiple accounts. Yeah, easy for us.
Amazing.
All right. Now, what if you get to the end of this calculation and our LOs are already a step ahead of us? What if you get to the end of this calculation and you realize you need more income? What can you do? How do you add more income? So we can stack income, right? If the borrower is self-employed and employed, let's say they have a W-2 job, if it's full-time, you're good to go. If it's part-time, they need to be doing it for at least 1 year, and then you're good to go. But we can combine income streams almost without hesitation, right? Almost every income stream that we offer can be combined with another income program that we offer, whether that's the same person with multiple income streams, 2 people with different income streams. Let's say you have a husband and wife, one's self-employed, one's retired. We're going to use their Social Security or retirement income, the other person's bank statement income. And then we can use their assets as well. Asset depletion,
Yeah.
asset utilization programs we were just mentioning. And then the IRA distribution program we have, this is the easiest and best income program in all of mortgage, period. Simply any borrower with a self-controlled retirement account, you can take, if they're 65 or older, 100%. If they're under 65, 90%. Divide it by 36, and that's monthly income on the loan. So 36,000 in retirement holdings is $900 or $1,000 a month in income. That qualifies as full doc income if it's standalone. So that could be your only income, period, right? That's all you need and your income's resolved. Or that can be accessory income to help you get over the finish line with any other type of loan. The only caveat there is if you're using the IRAs for IRA distribution, you can't also use them for anything else in the loan, like reserves or asset depletion or something along those lines.
If you use the full amount, but if
Yeah.
you break it off, you could break off what you need for the income portion from the IRA, and then still leave a remaining balance as reserves, which is pretty awesome.
Yeah.
So, the biggest thing I would say with this stuff, again, I'm going to go quote unquote non-QM stuff, is as opposed to the Fannie Freddie world, is we want to know everything we can find out about your client's assets and what they have available, because that just helps us make a stronger loan for them, basically. And a lot of times, we come into some kind of hurdle that we have to clear, and if it's from an income standpoint, we love knowing that they have these other assets, because then we have other avenues for giving them additional income. So knowing more is better in these situations from the asset standpoint.
Yeah.
We have a question. Did you say 65 years on the self-controlled IRA? So maybe the time that counts as being retirement age versus the calculation? Talk a little.
Yeah. So
Yeah.
if they're 65 or older, you use 100% of the balance. And if they're under 65, you use 90%. So yeah, 65. That's the trigger age for us.
Yeah, they can be 27 years old with an IRA that they have available, then we can still use it. You just go by 90% of it.
Do they need to be taking distributions on the IRA?
No.
That's one of the beautiful things about this program is they don't need distros. They don't even need to set them up. And even if they're already receiving distributions, we can still use this program. No tax returns required. And most IRAs are quarterly statements. That means on one bank statement, your income is resolved. Nothing else required.
And to back up on if they are receiving a distribution, we're not going to use what they're receiving for the distribution. We're still going to do the calculation based on the balance and whether they're 90% or past the 65, which is awesome.
Love it.
All right, now we're going to dive deeper. So we've been talking about how bank statements work from a high level. We want to really get granular. So the way we calculate your bank statement income, we're going to evaluate the deposits on the statements, right? Anything that doesn't look like business, we're not going to include. So typically these are transfers from the borrower's personal bank account, right? Usually that's not business income. And there's a handful of other things as well. If it is business income, we're happy to add it back in. We just need you to prove it, right? Document it, show us that it is actually business income, and then we'll add it back in. But technically or typically, we're going to throw out anything we don't think is business income. After we get our totals, we're going to evaluate the trend of income, right? So on a 12-month bank statement, we're going to look at the most recent 6 months versus the previous 6 months. On a 24-month bank statement, we're going to do that. Plus, we're going to look at the most recent 12 months versus the previous 12 months. I believe we have a 15% trigger there. So if it declines by more than that, then we're going to hit it with declining income. Now, the really cool thing with us is we can use the most recent stable income trend. So let's say in 1 year you have declining income, but the most recent 6 months have stabilized. We're still going to let you use that 6-month calculation, and we're still going to give you the same price as if you had the 12-month loan. And even on a 24-month, what if you're declining, but your most recent 6 months is stable? you're going to get that 6-month income and your pricing is still going to be the 24-month pricing. We're not going to penalize you double, right? Because the borrower is already getting hit for decline. We're not also then going to raise the rate or raise the price. We get it. Business is business. And then the last thing I want to throw in is if they have seasonal business, it may look like declining to us up front, but if you and the borrower explain and document the seasonality, then we're going to use that full 12-month or 24-month calculation, right? Because we get it. Business is business. Every business has its own nature.
Yep.
And then deposits. So large deposits. We're actually super flexible with large deposits because anything that's more than 50% of the average monthly deposits, right, is going to be considered a large deposit and must be documented. However, if we see 6 large deposits that are business income in the most recent 12 months, we're going to assume that's part of the nature of that business. And we're not going to force you to document them, right? So again, large deposits must be documented unless they meet the threshold of the nature of the business, and then they don't.
Yeah.
I have 2 questions. One, I'm sorry, I missed going back. What is the divisor for asset depletion?
Good
So
question.
both of our asset depletion and utilization programs have a 60-month division. So if you can ever use an IRA outside of that program, that 36-month is much more powerful. But if you need to throw it in there, you can. And we can even kind of split the IRA, like we were saying. Like let's say you have enough in stocks, bonds, and cash to go asset depletion or asset depletion. And then you can use the IRA separate at the 36-month and then use the asset depletion at the 60-month. So there's a lot of options. We're going to help you get the right one.
Yeah, but the 60-month, I think on the asset depletion is still very solid as well, right? So
Yeah.
stack it if you need to, basically, but otherwise just leave it as is.
I have not done a non-QM loan before. What are the standard reserve requirements?
Ooh.
I'm so glad you're on this webinar.
Yeah, that's a great one.
That's
So
exactly what I was talking about at the beginning of
Yeah.
this. I mean, that's, I have 16 to 20 AEs any given time that I have on the phone that I'm managing. And when they get on the phone with LOs, I always make sure that I'm asking my people to find out see if they actually know what non-QM is, because a lot of the people before they've done it, I mean, you almost want to shake your head or say, well, no, I don't really do a lot of those, or, it's really important that we fully understand it because it's a huge opportunity. So, having knowledge of what it is and the things that you can do with it. I mean, some of this stuff is really basic on a 12-month bank statement. So, can you ask the beginning of that question again? I got too excited and missed it all.
We're so glad you're here. What are the reserve requirements typically on a non-QM loan?
Yeah, it goes on LTV, loan amount, and it basically kind of cycles from there. So I mean, it's typically 6 months. Let's say 6 months at the beginning, right?
Yeah, it starts basically any first-time home buyer or loan above 80% or 85% LTV is 8 months. And then it starts at 3 months for the lowest loan amount category, and then goes up to 12 months and 16 months. Let's see, we pulled it up.
So it's 3 months at 750, 6 months at 1.5 million, less than or equal to 1.5, 9 months if you're above 1.5, that goes then up to 2.5, then it's 12 months, 18 months at 3.5 and above, and then if you're getting into the 85% LTV, then that's 6 months. So yeah, so it kind of breaks out.
Yeah, and every product we have, not every income type, but every product matrix has its own reserve category. So there's a lot of them. So definitely, make sure you work with your AE or download the matrix from our website because it can change. Let's say, you start out in your loan, you're starting out as a rate and term at 740,000. The borrower decides, you know what, let's flip this to a cash out and jump it up. Your reserves might change. We can also use cash out proceeds as reserves, right? So as a rate and term, you might need it. They say flip to cash out. Now all of a sudden you don't need reserves. So there's different triggers there you want to be aware of because your loans may change in process and that may change your reserve amount. Hopefully it's for the better, but if it's for the worse, we're here to help you.
And how do we initiate and provide to you all documents? Do we provide 3 bureau credit, a 1040?
Oh, that's a great question. So we do require a tri-merge credit report.
Yeah.
We require minimum 2 FICO scores, and we do have trade line requirements. So we definitely want to dive into that with your account exec. And then the other part, so how do you send things to us? We use a really great portal. We call it Blue Broker Loan Utility. And essentially in our portal, you're going to upload your 3.4, complete a couple of worksheets, and that's pretty much it for getting your loan set up. And then again, in the portal, there's a section to upload all your docs for your initial submission package. And once you've been conditioned, every condition will have its own place to upload the docs for that condition. Our portal is super easy to use, but it does have a little bit of nuance. So I like to always refer people, make sure your account manager or your account executive are there to help you with your first few loans.
Yeah.
Especially like registering and floating your rate, ordering disclosures, uploading that initial submission package. And then again, make sure that one of them's on the line the first time you or your processor uploads conditions, because that's a place where it can get a little confusing. It's not difficult, but you can accidentally upload your conditions multiple times if you aren't aware of the process. And then that creates a ton of extra work on our end. So we always like to avoid that, right? Because path of least resistance for you and path the least resistance for us too.
Awesome.
All right. So now we talked about, how we're figuring out the calculation. Here is the calculation. And down at the bottom, we have the exact wording from the guidelines, but we tried to make it easier by giving you an equation. So first, we're going to take the total eligible deposits, that biggest number. First thing we're going to do is multiply it by their ownership percentage. So if they're 100%, we're starting with all of it. If they're 50%, we're starting with half. And then we're going to multiply it by 1 minus our expense factor. So if you have a 50% expense factor, you're multiplying it by 50%. If they have a 10% expense factor, you're multiplying it by 90%. And then that leftover number, you divide by the number of bank statements provided. Always going to be either 12 or 24, and you're left with your monthly qualifying income. And then here's a good example of one. So in this situation, we have total eligible deposits of $240,000. We have 80% ownership and a 25% expense factor. So I just want to point out, you see in the bottom equation, 240,000 times 0.8 times 0.75. So that's that 1 minus 0.25, right? And then we're going to divide it by 12 because it's a 12-month bank statement loan, and you're left with $12,000 a month in qualifying monthly income. All right, now the most exciting part of the webinar.
So this is going to kind of touch base back to the question that you had about like how you get the documents to us and whatnot. This will give you a good look at it, actually.
Yeah. So we just launched a brand new AI tool. We're super excited because this is going to make everyone's job easier. And we're on our homepage right now, newfiwholesale.com. And you can see right there on the homepage, just scroll down a little bit and we have this Income IQ section. And we've made a commercial here. Let's go ahead and play it for him, Kayla.
I think Kayla froze.
Oh,
No,
are you there?
there she is.
I don't know if the sound's coming through from my side, but there's really great music.
That's funny. Yeah, and I want to encourage everyone to jump on the portal right after this, watch the commercial and kind of check out. We're about to show you what's next. Is we've provided both as a web page and as a PDF so you can have it on your computer. right here in the Income IQ Knowledge Center. The left one is the web page and the right one is the PDF. And this is a walkthrough of how to submit your bank statement. So we'll go through this. The first thing you do is you log into our portal, and this is what your home screen looks like. And you see right there, we have our brand new bank statement analysis button. It'll also say Income IQ on it, but go ahead and click on that. And then that brings you to your bank statement or your analysis pipeline. If you have ones that have been run or that are currently active, you'll see them there. If not, it'll be blank like this, and you're going to hit that Create Analysis button in the top right. And this will basically ask you, very first thing is who's your loan officer and who's your processor, right? So this should be either you are probably going to be one of the contacts, and if you're a processor, the LO, the other, or if you're an LO, the processor, the other. You click Save and Continue, and then it's going to generate a brand new lead and assign you a lead number. And then the next screen, it takes you to what we call our business narrative. Now, this form is used during underwriting, so we want it to be as accurate as possible. What we're going to need you to provide here is just some basics, kind of about the loan, but mostly about the nature of the business. What do they do? Where do they run it out of? And then some details about the bank statements you're providing. But again, this is used in underwriting, so try and make it as accurate as possible. Technically, only the fields with asterisks are required, but we do want you to complete as much as you can. And then down at the bottom, hit that Save button, and that'll move you forward into the Upload Documents section. So right here, you drag and drop your 12 or 24 months bank statements. You can do them one at a time, all at a time, and the system should even be smart enough if they're all in one PDF, it should be able to break them apart for you. So even if it's one document with all of them, you can put them right there. And then the system will scrub. Oh yeah, I got to click Save, click Create, and then the system will scrub the files you uploaded to verify it has everything you need. So it first sends you an email when you finish uploading everything, and then it sends you a second email once it's finished this first scrub. That second email will either tell you, hey, we have everything we need. We'll let you know when the calculation is complete, or it'll say something's missing. Please reach out to your AE or log into your analysis pipeline to see what's missing. So if we go ahead and scroll down a little more. So if everything is needed, or this is what it looks like while it's processing, you can actually visually confirm. It'll go through each document one at a time and show you that it's processing them. And then if something's missing, this is what it'll look like. You'll get kind of two indicators. At the top, it'll say, this many months are missing. And then in the list, you'll see that red missing item. And that means that it's expecting that month, but it doesn't see it. Now, sometimes it is missing, right? And then you just need to upload it. Sometimes if you uploaded everything in one document or it indexed wrong, you want to reach out to your AE and check, because they'll have the bank statement desk manually verify if anything is or isn't missing if you're confused by it. But usually it's pretty accurate and you just need to jump in, which is the next section. So let's say it's missing something. You start by logging back into the portal, going back to your analysis pipeline, and then you'll see your lead there. So you want to open up your lead, and then it'll take you right to the bank statement section. And now you have a blue button in the top of the document list. It says upload, I think it says upload documents or something like that. If you click that,
It's upload file.
Upload file,
Yeah.
Yeah, upload files, there it is. If you click that, then it brings up the box so that you can drag and drop the missing items. And then once your income is completed, all you have to do is go right back to that pipeline, your analysis pipeline, but on the right-hand side of the lead you want to turn into a loan, you click that register loan button, and then it converts this lead into a loan where you start by dragging your 3.4 in. But the beauty of it is all your bank statements, your business narrative, and your income analysis will already be waiting for you. So you don't need to re-upload them. You don't need to figure them out again. They're good to go.
Super, super excited about this for everyone. I mean, I think for anybody that has been doing these types of loans, you know, it was pretty clunky at the very beginning when I started doing them. So, I mean, it's emailing, you know, 12, 24 months bank statements. Oh, I thought I sent you that. I'm missing one, the back and forth. Then you get it in, then you're waiting for the AEs to basically get their income calc done for you and get back to you with it so you can get it into the file and get it in and whatnot. So this streamlines so much stuff for us. So I'm really excited for all of our brokers, our LOs, processors, for all of you guys to be able to use this. We just went live with it on Monday. So it should be a real game changer for everybody. And as you can see, you know, it's very user friendly, and it's just a lot of pointing and clicking and uploading stuff. And we do that, all of us, on a daily basis. So should be a very natural, easy tool for you to use, basically. So super excited about it.
Yeah, and one of the best things about this is that it's doing three things, right? It's giving you a faster income report. Before it took basically, if you sent me bank statements, I'm so busy during the day and there's some things I can only do during office hours to where it's a 50-50 chance if I get to those that day or if I have to wait till after hours to get to them. So you're already potentially losing time. And then let's say I review them and I need something else for you. Then I'm going to send you an email probably after hours. So then you're losing more time. Whereas right away in about 15 minutes, it's going to verify your uploads and let you know if anything's missing. So that's already saving you a potential day, right? And then after that, I would fill out a worksheet and send it off to my bank statement desk, who would take 24 hours from when I submitted it to get it back to us. Whereas now, if you upload your bank statements in the morning and nothing else is needed, you're probably going to have that lead's income same day, right? If you upload them later in the afternoon or in the evening, you're probably going to have it next day. So it's really making things faster. Of course, it's making it easier. And the most beautiful thing is it's making it more secure because you're not emailing things to us. You're uploading them right through the portal. We're trying to protect the borrower's sensitive data and make sure that that's always secure for the borrower. All right. So that's how to submit the bank statements, right?
Yes, we really love making things easy for you guys here at Newfi.
And then
And it gives you guys a lot more control over the process, which I think is awesome, you know.
Yeah, that's a great point. You're driving the process with this new system as opposed to waiting for the process to be completed with the old manual way of getting things done. All right, now we talked a lot about bank statements. We dove in on how to calculate things, and we dove in even on some of the ways we can stack income. But here I provided a list of different things that we do that no one else or very few other lenders do. So you'll notice the first thing on the list is that personal bank statements program. Most lenders don't have anything like that. And I think we're the only lender that can use the W-2 payroll deposits on our personal bank statements program. So right away, that's, again, one of the easier ways to get bank statements done. There's no expense factor, and it even works when they're paying themselves W-2, and it has a 20% ownership entry point. Our W-2 to 1099 program we talked about as well. One of the most powerful programs because you can effectively get a self-employed borrower qualified and approved with less than 1 year of income. So that program, definitely keep it in your back pocket. And just a little aside on that program, I once had a dentist who had been selling Invisalign for years, and he didn't want to provide bank statements, and he wrote off a ton in taxes, and he was on a 1099. Well, we got the contract, and the contract actually stated that Invisalign provided all resources. So that tells us he has no expenses. So he's 100% commission on a 1099. We qualified him as full doc, and it was super easy to close because, again, we just needed year-to-date income to give them a calc. It was super easy. Want to highlight again, 1 year self-employment and 1 year variable income. So anyone who's part-time, overtime, using bonus, commission, tips, etc., any variable income category, we technically only need them to prove they've received it for the 12 most recent months, and we can figure out a calc for that and use it. Our IRA distribution program, I want to re-explain this all over because this is it's literally the easiest, most powerful income in all of mortgage, period. Any borrower with a self-controlled retirement account, it can even be a 401k if they're no longer with that employer and have not rolled it into a new program. You take 90% of the balance in the worst case scenario divided by 36 months, and that's direct income on the loan. Most IRAs are quarterly statements, so on 1 month's bank statement, income can be resolved. Nothing else required, no tax returns, no other document.
No setting up a distribution, not initializing a distribution. I think that's the biggest piece. That's the power of what we're offering here in comparison to a lot of these other programs, because they are out there. But to not have to have the distribution set up is probably the biggest thing that I think is what makes this special.
Yeah. The next one, primary wage earner credit score. So we launched this kind of recently. So any loan, income qualification loan, if you have 2 borrowers, if one of them makes more than 50%, then we're going to allow you to use their credit score for pricing. So the borrower who makes less than 50%, if they've got, as long as they have a 620 or better, which is technically outside of qualification guidelines for using income, right? So there's a huge built-in niche right there, right? Is we'll allow you to qualify on the primary wage earner FICO as long as the other wage earner has a 620 or better. And then here's a really cool one. Pretty much every lender can offset departure residence ownership by getting a 1007. We don't need your borrower to pay for a 1007. Why make them spend that money? We can use a market rent report that shows comps that we trust. Your AE can pull it for you, but we'll even take what Zillow shows for potential rents, and we'll use that to offset up to the cost of ownership. So it's like 80% of that number up to the cost of ownership. No need for a 1007, but if you do have a lease in 2 months, you can use that same calculation to add income, so it can go beyond ownership. And then one of the cool things here is, so we can use an AUS approval on a non-QM loan. Well, what does that mean? We have 2 major ways to use it, right? If your borrower is just shy of meeting trade line requirements, we can use an AUS approve as a 12-month trade line. So that could put them over the edge to qualify. Another thing on our loans is we require either the most recent 12 or 24 months housing history to be fully documented. And generally speaking, the borrower can have up to 1 30-day late on any mortgage, but that puts you in worst case pricing. Now, sometimes it's hard to prove your mortgage payments, your rent payments, if they're paying cash or the paper trail is difficult. Don't even worry about it. If you get an AUS approved, you provide that up front, we can use it to bypass housing history. So again, on any of our income qualifying non-QM loans, you can use an AUS approval for either adding a 12-month trade line or bypassing your required housing history. Now, of course, that doesn't mean we're not going to look at the credit report. So if they do have a mortgage late on the credit report, we're definitely going to hold it to them. But in a case where the credit report isn't current, or they're paying rent to a private landlord or something along those lines, a private mortgage that's hard to document, get that AUS approved, provide it to your underwriter, we'll bypass housing history.
And I've got a couple questions here.
Great.
What do we use as income on the 1003?
Well, I guess it depends on what type of program you're speaking of, but generally speaking, on a bank statement loan, once you get through the end of the process, we're going to provide you with the qualifying income number. So that'll be provided when your income report is done and you log back into that analysis pipeline. You open up your lead and there'll be a table presenting your results. That will have any important information our reviewers found when they were processing your statements, and it'll have your monthly qualifying deposits. It should even represent if you had declining income and you have to be using that 6-month or the 12-month instead of the longer. It should represent that as well. If you do have any questions, you don't understand the terminology, your AE is there to help. They'll know exactly what it is. And they can even open up the full calculation report to dive in. And I personally like to do this on all of them, because I want to make sure that the deposits we're using are eligible deposits, nothing else accidentally snuck in. But more importantly, if there's anything that we're saying is not income, things that we did not use, I want to make sure that any of that may be income that we can add back, that you are aware of, so that you and the borrower can be empowered, right? If our review said these deposits we don't think are income, but they are, then you're going to have a lot lower number than you're expecting. So we want to make sure you can add those back in and get the proper income.
And then how do you decide if you use 12 or 24-month bank statements? Are there differences in the terms?
It's a very good question. I think it's mainly, if you can, it's basically a price point is really what it boils down to. So, the 24-month is going to give you a little bit better pricing in most cases. It's not substantial. So if it's easier just to get 12 months from them, then you do the 12 months. I think it really just depends on the client that you're working with, how savvy they are to getting their statements or wanting to send documentation, or how rate sensitive they may be. So those things are all going to drive exactly what you're asking. Which way would you go?
Awesome. Okay, and to wrap us up, we want to help you do these loans, do more of them, market to these borrowers. We have a full bank statement guide and marketing playbook that has a 30-day calendar that has email templates to referral partners, how to find referral partners using ChatGPT and AI to get those referral partners, and then included white label so you can customize with your own logo, your headshot, your name, your number, flyers to print out, or even social media posts to use. The bank statement kit that we also have on here, and we will email it with this deck and this recording of the webinar, has so much great things in there: video scripts, social media posts, flyers. We're here to help you generate this business, and your AE is here to help you every step of the way. So thank you so much for joining us here today. This was an awesome, informative session. Thank you, everyone, for the kind comments that you're saying in the chat right now. And thank you, MJ and Scott, for helping us out here today.
Our pleasure.
Yeah, thanks for showing up, everyone. We appreciate you.
Yep. Thank you so much, guys.
Wonderful. Have a good one.